Well, that's a great question. People say, I want to invest, I want to be an entrepreneur, I want to make money. And Robert Kiyosaki, he'll often teach that there's four different asset classes or place people could learn or focus their attention and their investing. The first one's business, second one's real estate, third one's paper assets like stocks and options. And then the fourth one's commodities. That's like gold, silver, soybeans, oil, stuff like that. And it's funny that you ask that question because you will hear people debate on which one's best. And that's a silly debate. If you look at business, people say, well, you don't want to go into business because 3 out of 4 businesses fail in 3 years, or whatever the statistic is, right? And you got employees and headaches. Guy like Richard Branson, maybe Mark Cuban, you got to prove that they're wrong. Someone says, oh, real estate, you're going to be, cleaning toilets and tenants are going to call you, all that. Well, you're going to have to go to people like Ken and prove he's wrong. And I've heard that if a guy's good enough real estate or whether real estate investor, whether you like him or not, you can even be the president of the United States. I've heard that somewhere. So, regardless of the asset class, you look at commodities like energy and oil and gas. Someone says, oh, it's too risky. You drill a dry hole. T. Boone Pickens has done okay. And when it comes to paper assets, you have Warren Buffett, who has bought stocks under every U.S. president since 1940, whatever it is. And so really the idea of which asset class is better or worse or one better than the other is not the issue. The question you ask is really good is how do I decide which one I want to go into? And I think one of the first steps is learn a little bit about each one. Read a book on business, read a book on real estate like Kenny's, ABC's to real estate investing, read a book on stocks, read a book on commodities and start to get a feel. In as short as I can make it, I would say that the advantage of business, the advantage of real estate is OPM, right? Other people's money, debt, great tax. You have debt as a lever. Business, you have OPE, other people's energy, other people's effort, other people's education, other people's expertise, other people's everything. And so business helps us leverage the talents of other people to give value. Stocks have some nice advantages in that they're liquid. They're very agile. Probably the easiest way to make money in a crash would be in the stock market. Guys like George Soros do this all the time. And then commodities tend to hold their value. Dollars can go up and down. Euros can go up and down. And so those are some of the basics. And so you find something you like. You find something that's attractive to you, something that's interesting to you as you learn a little. And then maybe you learn a little bit more through mentors and books and other places. But those are the 4 asset classes. None of them are better than the other. They've all produced billionaires. They've all produced people who've gone bankrupt, depending on what they know and how hard they've worked. The reason I like real estate, and I wish I had more of it, I'm on the hunt currently to get more. It's not just about paper. I love business. I love all the asset classes. And so even though I'm known for paper, I'm interested in any asset class. They all appeal to me. And the thing that's interesting about stocks is it's very difficult to say, well, Apple Computer's going up or Apple Computer's going down or, Tesla's going up or down or any of the companies you hear about. But the one thing I feel very confident, the one prediction I think I would make with more confidence than any other would be the value of the dollar. Since we went off the gold standard in 1971, the dollar's lost value. And even if you go back before then, things have gotten more expensive all the time. If there was one bet I'd be willing to make, 20 years from now and feel confident, I'd say the dollar's going to be worth less 20 years from now than it is today. So what does that mean for a real estate investor? Well, if I borrow some money, that doesn't increase. That's a set amount that will go down as payments are made. If I get a fixed payment, a fixed rate, I know the expense won't change. And so if the dollar loses value, rent would go up and the value of the house would go up. To me, that's a formula. Now, people might not understand what shorting means. I have other videos that people can learn about that. But the idea of going short is really when you're saying, look, I think something's going to go down and I want to use a technique to profit from it going down. In my opinion, there is no better vehicle than real estate to short the U.S. dollar, even more than finding an inverse ETF on the dollar and shorting it. Real estate produces cash flow to do that. So, I love the idea of using debt as a way to short the US dollar as inflation grows. So people often ask, what's the first step? How do I get started in business or paper? We have great resources for people that want to get involved with paper. If you Google Andy Tanner, you'll wind up somewhere with either a book or a resource or class. And so that's not hard to find. There isn't a better place that I can think of than Ken McElroy to invest in real estate and learn your first steps. This guy has done thousands upon thousands he has thousands of doors and units. And so if you want to learn how to do something for the first time, it would make sense to me to hop over to kenmcElroy.com and learn from someone who's done it 1,000 times. Besides that, Ken's just the best. He's solid.